returns. Well, one question I haven't really asked of our guests here, is now a good time to be investing in hedge funds given the crummy performance that a lot of those funds have delivered over the past couple of years? One person who can answer the question, Mark Jurish, is the CEO of Larch Lane, here with me in Las Vegas. So, Mark, let's just ask the question, is it a good time to be investing in hedge funds? Because you could have done a whole lot better in the stock market the past couple of years.
I think so. I've been doing this for 25 years, and the press always has some issues with hedge funds. So 25 years ago, it was hedge funds are clouded in secrecy. The Wizard of Oz, one man pulling the lever. After that, it was hedge funds are too expensive. They can't produce a good return, despite the fact that over a relatively long period of time, they did outperform the S&P. Today, it's the last 3 or 4 years, performance has suffered versus the S&P. That's true.
So
now, given the fact,
so it's true. Don't blame it on the press.
Well, it's true over the last 3 or 4 years. Given the fact that over the last 3 or 4 years, the S&P has gone straight up, and the hedge fund is long and short, you would expect that a hedge fund would underperform that marketplace. If you're a long, biased investor and can stomach the inevitable volatility of the markets, then ETFs, S&Ps are a good investment.
When are we going to find out whether hedge funds can deliver that kind of hedged return, right? Something north of zero, absolute, in a down market.
So they have. Over the last 15 or 20 years, they have.
Of course, I'm looking ahead, though.
What's happening now, and the reason that I'm very optimistic, is that there are less assets in the hedge fund space because of the Volcker rule. Banks are either out or getting out of the hedge fund strategy space. That makes capturing alpha a little easier. The macroeconomic environment is getting a bit better, so more hedge fund managers are putting on risk-on type trades, and those are the two reasons I believe that the future is bright for hedge funds.
Well, I don't have to be long only as an alternative to hedge funds. I could buy an ETF. There's some pretty sophisticated ETFs out there. Why not just do that?
As I said earlier, if you have the expectation that the market's going to continue to go straight up, and it's gone up a lot over the last 3 or 4 years, and can stomach the downside volatility, that's an appropriate investment. What I found is that most investors prefer a steadier, more stable return stream. That's where hedge funds can fill the void.
Ultimately, is Wall Street regulation, whether it's in the form of Basel III, Dodd-Frank, the Volcker Rule, we think of it mostly applying to banks, of course, that's where it's directed. How's it going to affect the hedge fund world?
So regulations is only one small part of what's going on in the hedge fund world. I would say there's more emphasis now on a hedge fund, especially a startup hedge fund, being institutional, which includes being able to deal with regulations, but more so having a good operational infrastructure, having a marketing capability so that they could raise assets. So we have found fewer inferior hedge fund launches, but there's still a very high quality and steady flow of really good managers who have institutional infrastructure and are able to raise capital.
And this is your wheelhouse, right? Small hedge funds, you're either investing in them as a fund of funds or seeding them at the very, very early stages. Is it harder now to start a hedge fund than it was, say, 3 or 5 years ago?
Much harder because of the cost that we referred to earlier, because of the fact that institutional investors, who are the predominant suppliers of capital, prefer more established hedge funds. That's the opportunity for hedge fund seeders, providing that day one capital, and for early stage hedge fund investors like Larch Lane.
There are a lot of large funds. So we talk about underperformance of the hedge fund industry relative to, say, the stock market. But there are some large funds that have been hitting it out of the park. Is it not better to be big?
In certain strategies, it's better to be big.
Which ones, for example?
If you want to trade an equity stat R portfolio where you're competing with the big boys, so you're competing with firms that have invested hundreds of millions of dollars of research, have the best PhDs in the world, the best computing power, you better have a large infrastructure and you better have a vision of getting big so that you can compete. In a predominantly equity long-short or credit long-short portfolio, where there's typically 1 or 2 decision makers, size could be your enemy because of the capacity constraint on the short side.
Now, is that not changing, though, a little bit because the exit of Wall Street from some of these, the disappearance of the prop desk, for example, creates liquidity opportunities for the street, for hedge funds?
Absolutely. So it works both ways. There's going to be a happy medium, which we don't have yet, which is banks exiting. Hedge fund industry has gotten bigger, but moderately bigger, $2 trillion, $2.2 trillion. There will be a tipping point, but not for the next couple of years.
What about fees? We hear that there is pressure on hedge fund fees, but where do you see that pressure greatest? Does 2 and 20 still exist?
One size does not fit all. So I mentioned equity stat arb, the ability to compete. You need a lot of resources. There you better have at least 2 and 20 because you need to pay very competent people to build these huge systems. As one example. However, what we're seeing in the less resource-intensive hedge funds like equity long short, 2 and 20 for early stage is dead. 1.5 and 15,
okay, and
in the form of what's called founder shares, limited share classes of size and duration for the early movers like Larch Lane. That extra savings goes directly to the investor, and the manager can still make plenty of money at 1.5 and 15.
So that's another reason why it makes sense to be looking at the small guys as opposed to the big guys.
In our opinion, yes.
All right. Mark, thanks very much. Good talking to you. Nice to see you here at SALT. That's Mark.